Hello everyone, welcome back. So here we are with starting the next set of questions, that is from question number 33 for RBI grade B officers. So beginning with question number 33. Green accounting means measuring the national income of the country, taking into account estimation of number one, the total forest area of the country, number two, the destruction of forest cover of the country. Number three, pollution and environmental damage. And number four, area of reclaimed fallow land. So the correct answer to measuring the green accounting of the country, which means is that option number three, actually, discussing that. A new system of sustainable accounting, which is a new concept, which is the green accounting, has emerged in the recent times. It permits the computation of income for a national or a nationality by taking into account the economic damage and depletion in the natural resource base of an economy. So accordingly, it is a measurable or measure of sustainable income level that can be secured without decreasing the stock of the natural assets or the normal assets. So in that case, I will be choosing question number three as the correct answer. That is pollution and environmental damage. I will also mark this as the correct answer. Next, moving on to question number 34. Under which method is national income equal to the sum of all final products measured at factor cost, net of depreciation on fixed capital assets, and corrected for income payments to and from abroad would equal national income? Firstly, we have the product method. We have the expenditure method, number three, income method, number four, aggregate method, and none of these. So discussing this, most of us have already done all these in our primary classes or in the high secondary classes, I guess, 11 and 12. So discussing this in details, in the product method, the national income consists of measuring the output of all the producers, and we deduct from this total the intermediate purchases. An unduplicated figure of this kind can be obtained separately for each producer. So actually, this represents the value of the intermediate products which he starts, and hence his contribution to the total value of the production. So accordingly, if I say this is done entirely in the product method, which is option number one to our answer. That is option number one, product method. I will mark product method here. Okay. Next, moving on to question number 35. Which of the following statement is or are correct regarding national income? So we have to mark which one is true. First option, it is a stock and not a flow. It measures the stock of commodities held by the nationals of a country at a point of time. It measures the volume of commodities and services turned out during a given period. So accordingly, if I say it's a stock and not a flow, that means it's the wrong thing. It measures the stock of commodity held by national at a particular point of time. That is also not correct. So accordingly, if I say option number C, it measures the volume of commodities and services turned out during a given particular period or during a given period. So national income is a flow and not a stock, as contrasted with national wealth, which measures the stock of commodities held by nationals of a country at a point of a time. National income actually measures the productive power or the purchasing power of an economy in a given period to turn out goods and services for the satisfaction of human wants. So by that, my only option C is correct, which is marked in option number 3. That is only number C. So I will be marking option number 3 as only C, which is the correct answer. Next, moving on to question number 36. Which of the following statements is or are correct regarding per capita income? Firstly, it measures the average income earned by person in a given area. Given area can be city, region, country, etc. It is calculated by dividing the area's total income by its total population. It is usually expressed by national currency. So we have three options here and we have to choose. So accordingly, it measures the average income earned by the person in the given area. This is definitely correct. And it is also calculated by dividing the area's total income by its total population. What is actually per capita income? Per capita income is usually expressed in terms of commonly used international currency. It can be United States dollar and any other currency if required. And it is useful because it is widely known. It is easily calculable from readily available gross domestic product and population estimates and produces a useful statistic for comparison between between wealth and sovereign territories. This helps to ascertain a country's development status. So accordingly, I have option number A and B, which is among the three, A and B as correct. So I will be choosing option number 4 as the correct answer, which is both A and B. Next, moving on to question number 37. Which of the following is not cited as a weakness or limitation of per capita income as a tool for measuring prosperity? So we have 5 options here. It does not consider inflation. It does not reflect income distribution. It does not count non-monetary activity. It is not a mean value. So I will say it is not a mean value. Critics claim that per capita income is a mean value and does not reflect income distribution. If a country's income distribution is skewed, a small wealthy class can increase per capita income substantially while the majority of the population has no change in the income. So that can also be done. So in that respect, median income is more useful when measuring prosperity than per capita income, as it is less influenced by others. So it is not a mean value, rather it's a median value. So I will choose option number 4 as my correct option. Next, moving on to question number 38. Consider the following statements regarding per capita income in India. Option A, Delhi is the most prosperous state with the highest per capita income in the country. Number B, the per capita income of India was rupees 80,000, 80.388 in 2014 to 15. The national income in 2014 to 15 stood at rupees 11.217.079 crore. Now we have to choose which of the statements given is correct or are correct. That is our question. So I will say the per capita income of India was rupees 80.388 in 2014 to 15. Now for this, you need to have a lot of introspects about the statistics and the figures that are going on changing. Ministers of State for Statistics and Program Implementation, that is VK Singh, on 2015 February, that is I think 26th of February 2015, informed the Indian Parliament that the country's per capita income was at rupees 64,316 in 2011-12. It subsequently increased to 71,593 in 2012 and 13. And then in 2013-14, it increased to 80,388. And ultimately in 2014 to 15, it increased to 88533. So accordingly, we have this option then as the correct one, that is option number B. So we will find out which is the correct option to this only. That is option number 4. So option number 4 is our correct answer, which marks the per capita income of India was rupees 80.388 or 80,388 in 2014-15. Next, moving on to question number 39. With reference to the World Bank's latest estimates on per capita income and GDP released in July 2015, which of the following statements is or are not correct? We have 5 options. India's per capita income declined during the year 2013 to 14. India is 169th in terms of per capita income in the world. Number 3, India's GDP crossed $2 trillion in 2014. And number 4, in terms of official dollar rupee rate, the Indian economy is 9th in terms of GDP size. And number 5, we have as all of the others. Now let's discuss. According to the World Bank latest estimates on per capita income and GDP, India's per capita income rose 9.7% to $1,631 in 2014 from $1,487 in 2013. The growth rate in per capita income in 2014 was higher than the 0.4% rise in 2013 over $1,481 in 2012. So India's per capita income has been rising in rupee terms, but the depreciation of the country's currency against the dollar made it look smaller than in 2012 and 13. So accordingly, we have answer number 1 as the correct one. India's per capita income declined during 2013 and 14. Coming to answer number 40. The key concept in the national income and product accounts is gross domestic product, which is the GDP. In this context, which of the following statements is or are correct? A, it is the market value of all inflation of all, it is the market value of all final and intermediate goods and services produced within a given period of time. GDP does not count transactions in which money or goods changes hands. Sales of stocks and bonds are not counted in GDP. So I will say GDP does not count transaction in which money or goods changes hands, and sales of stocks and bonds are not counted in GDP. So option B and C is the correct one, which is number 1. Now coming to the discussion of this, why am I choosing this? GDP is the total market value of a country's output. We all know this, that is gross domestic product. It is the market value of all final goods and services that is produced within a given period of time by factors of production located within a country. Many goods produced in the economy are not classified as final goods, but instead it is considered as intermediate goods. Now, intermediate goods are produced by one firm for use in further processing by another firm. That's the intermediate goods. For example, let me say, tires sold to automobile manufacturers are intermediary goods. The value of intermediate goods is not counted in GDP. So in that case, for example, if I take flour, FLOUR, flour. So flour can be a finished product also, but it can be an intermediate product for baking cakes. So that is intermediate product. In that case, it will not be counted in GDP. We subtract that, or we do not consider that. So that is why for 40th question, answer number 1, which is both B and C, is the correct answer. So I have been discussing up till question number 40 in this video. I hope all the answers have been clear and well understood by you all. So accordingly, I will conclude my video here up till question 40. In the next video, I will be coming up from the next set of questions, that is from question number 41. I hope you have understood and liked the video. Thank you for patiently hearing me out. Thank you.